Hey everyone, welcome back to Corporate Decoder, the place where we break down these dense financial reports and find the real juicy bits. So for today's filing, we're diving deep into Qualigen Therapeutics Incorporated, and let me tell you, their latest report is quite the roller coaster. Let's start with a quick look at their latest filing. It is their quarterly report for the period ending the 30th of September 2025. Now, before we get into the nitty gritty, if you love getting these corporate insights without the jargon, make sure you hit that subscribe button and the notification bell. Also, we've got a fantastic community over on Discord where we discuss these filings more, and the link is right there in the description. So, after you are done here, go on over and join the conversation. Alright, let's jump right into the numbers that often tell the real story. Looking at their balance sheet, a big number jumps out, cash and cash equivalents. As of the 30th of September 2025, they had a whopping $38,777,000. That is a massive jump from just over $1 million at the end of 2024. This tells us they've clearly been busy fundraising, and that is usually good news for an early stage company. But where there is cash, there are often liabilities right behind it. Their total current liabilities are nearing $5 million. This includes things like accounts payable, accrued expenses, and some convertible debt. It is not alarming on its own, but it is something we'll keep an eye on. Now, let's move over to how they've been performing. Their statement of operations shows us their income and expenses. And here is the tough part. For the 3 months ending the 30th of September 2025, they reported a loss from operations of $1,429,000. This isn't a surprise for a company in their stage, but it is important to see how consistently they are operating at a loss. And when we look at the 9-month period ending the 30th of September 2025, that loss from operations really adds up. They are reporting a total loss from operations of over $5,838,000. That is a significant chunk of change, and it just goes to show the high cost of developing new therapies. But here is where things get interesting and a bit technical. They're reporting some wild swings in the fair value of warrant liabilities. For the 3 months ending the 30th of September 2025, they had a loss of $148,000 here. And for the 9 months, it is almost $94,000. This number can be a bit of a black box, but essentially, it reflects how the value of these warrants changes as the company's stock price moves. It is not a cash expense, but it does impact their reported profit or loss. And then there is interest expense. For the 3 months ended the 30th of September 2025, it was about $455,000, and for the 9 months it was over $635,000. This is the cost of borrowing money, and it is a significant ongoing expense. When you put all of this together, the net loss attributable to Qualigen Therapeutics Inc. for the 3 months ending the 30th of September 2025 was a bit over $2,905,000. For the 9-month period, that loss balloons to over $7,238,000. So while they've brought in a lot of cash, they are also spending a lot of it to keep the lights on and push their development forward. Now, looking at their cash flow, the best news here is that their cash and cash equivalents increased by a massive $37,602,000 for the 9-month period ending the 30th of September 2025. That is largely thanks to their financing activities where they raised over $44 million. This is crucial because it shows they have the funds to operate for a while, but it also highlights how much they rely on external funding. However, their operating activities used over $4,828,000 in cash. This is typical for a clinical stage biotech company. They're investing heavily in research and development, which doesn't generate immediate cash flow. And on the financing side, a huge chunk of that cash came from issuing convertible debt and preferred stock. For the 9 months ending the 30th of September 2025, they brought in over $41,911,000 from a private placement and another $3,295,000 from issuing promissory notes. This shows they are actively seeking and securing capital, but it also means more dilution for existing shareholders down the line. Let's look at their equity section. As of the 30th of September 2025, they have a total stockholders' equity of about $38,547,000. This is a big improvement from the deficit they had just a year prior. This positive swing is mainly due to all that new capital they've raised. A huge part of that equity is their preferred stock. They've issued a significant number of Series B convertible preferred stock shares, over 39,000 at a price of $1,000. Per S hair, bringing in a massive $39.9 million. This This is a major move that significantly changes their equity structure. And their common stock has also seen a big increase in shares outstanding, jumping from around 736,000 at the end of 2024 to over 3 million by September 2025. This suggests a lot of conversions and new issuances, which is common when you are raising significant capital through preferred stock and convertible debt. Now, regarding their filer status, they're marked as a non-accelerated filer and a smaller reporting company. This usually means they are still in the growth phase and have less than $1 billion or so in public float. It is typical for companies at this stage. Here is where things get a little concerning. In their controls and procedures section, management admits to some material weaknesses in their internal financial controls. They mention an insufficient number of accounting personnel to segregate duties, a lack of effective controls for their financial system, and no formalized documentation of processes. This is a red flag. It means there is a higher risk of errors or fraud, and it is something they need to fix as they grow and hopefully secure more funding. They directly state they do not expect remediation until they obtain additional funding to strengthen their accounting department. Looking at their business strategy, their focus remains on developing treatments for cancer. Their lead program, QN-302, targets pancreatic cancer, and they also have a preclinical program called PanRAS. They've also got this co-development agreement with Maritime for a vascular conduit solution, Duragraft. It is interesting that they are diversifying their revenue streams potentially beyond pure drug development. Let's tie this all together. Qualigen Therapeutics has clearly been active in securing capital, evident by that huge jump in cash holdings. They've brought in significant funds through preferred stock issuances and other debt instruments. This is a positive sign that investors believe in their long-term potential. However, the company is still burning through cash at a rapid pace, and the increases in general and administrative expenses, largely driven by professional fees for fundraising and consultants, are considerable. The material weaknesses in internal controls are a cause for concern, suggesting a need for immediate attention once funding allows. The business strategy shows a continued focus on their therapeutic pipeline, alongside a notable move into cryptocurrency treasury operations, which is a bold and potentially risky diversification. So, what is the verdict? Qualigen is in a high-risk, high-reward phase. They've secured the funding to continue operations and development, which is a win. But the operational losses, the reliance on continuous fundraising, and those internal control issues are significant challenges they must address. Their venture into cryptocurrency treasury operations is a fascinating, albeit speculative, move that could either pay off big or introduce new unforeseen risks. For investors, it is crucial to weigh the promise of their therapeutic pipeline against these significant financial and operational hurdles. What are your thoughts on Qualigen's strategy and its financial health based on this report? Let me know in the comments below. If you found this breakdown helpful, smash that like button to show your support. And for more in-depth dives into the world of corporate finance, make sure you subscribe and hit that notification bell. Don't forget to join our community on Discord. The link is in the description. Thanks for watching, and I'll see you in the next one.